Hey everyone, Tyler from Stockscores here. I hope that you're having a good trading day. I want to talk a little bit about the volatility that we've had in the market the last couple of days because given that it's October and the memories of crashes that have come in October, I think that there are many who are concerned that we're at the beginning of another stock market crash. And I want to first explain different types of market corrections, how they work, and then I'll demonstrate the things to look for in understanding whether this is going to be another big correction or if it's just a little bit of a pullback in a longer term upward trend. So the first thing I want to differentiate between are corrections that are because there is emotion in the market and markets have gone up too quickly. And then we'll look at corrections that are really the result of a significant change in fundamentals that warrants lower prices for the stocks that you follow. The first one is when a market is emotional. If we look at the chart that you see on screen here, you can see that back here in late 2017, we had a downward price move. Well, this is a situation where the market just went up too fast, and there's a rule that I like to talk about a lot. It's basically that when markets run away from their trend line, they usually come back to their trend line. So anytime you get a parabolic curve up and away from the trend line, you get a correction back to it. And that's what happened early in 2018. And it lasted 2 months, and then the market went back into its upward trend, and that was fine. Now, later in 2018, like in the fall of 2018, September, October, which is where we are at now, we had what I would consider to be more of a real stock market correction. And that was when the market broke its upward trend line and really came down quite a lot. And we saw the market move from the 290, 295 range all the way down to 235 on the SPY. That's a pretty significant drop. And I think that's the kind of thing that most investors are concerned about and want to avoid. And of course, because that happened in October of last year, and of course we've had crashes in October of 1987, and there have been others, there is this tendency to worry about October. Interestingly enough, October is actually not the worst month of the market, or worst month of the year for the stock market. That actually tends to be September, but either way, it's this time of year, and that's what's important. We should also keep in mind that the best time of the year for the market is typically from sometime in October, maybe November until May. So although it maybe feels a little rocky right now, realize that these sorts of market pullbacks are actually good for the market, and we often get good upward trends out of them. All right, so returning to the chart, let's just talk about how we know when there is a correction coming. And that typically happens in a few different things have to happen. The first thing is we have to get a break of the upward trend line, and that's typically from a falling top. Now I'm going to make this chart a 2-year daily chart just so we can see a little more detail on what was happening back then. So we'll switch this to 2-year daily. And you can do that with these quick links on stockscores.com. And what we're looking at now is what happened right here, which is the thing we'd want to avoid. And what you notice is that there is an upward trend line here that was broken. And also notice that this little high point was lower than the previous high point. And so what that tells us is that the last time the buyers tried to push prices up, they failed to hit a new high, and then we rolled over and broke the upward trend line. And that is a pretty strong sell signal. So here on this day, early in October, we had a strong sell signal to get out of the market. And of course, you see what happened. We had a significant sell-off into the end of the year. So now let's talk about where we are at right now. And we'll zoom in again on this just so that we can see a little more detail. I'll make this a 1-year chart now. And so here is the chart of the S&P current 1-year look back. And what we see is something called a cup and handle pattern. So we came down, up, back up to resistance, and we really got stuck at the all-time highs. Now it's important to notice that because we don't have a falling top. We have a market that's made a double top, which is somewhat negative, but not as negative as a falling top. And then the last couple of days, we've had some, I would say, fairly good selling pressure, but this selling pressure goes back to, I think, September 19th when we started to pull back. However, the important thing to think about is where the upward trend lines of support are. So we've got an upward trend line right about there like that, which is where we are now. That should be supportive for stocks in the short term. Doesn't mean it will last, but in the short term, I expect that the market will bounce back a little bit over the next couple of days, maybe get back up to the 294, 295 level. The more critical thing is whether we start to break down through these horizontal zones of support, because when we do that, now we start to really bring out some fear and some panic that can bring on more selling pressure. And that hasn't happened yet. And so until we start to get down through the 285, 284 level, the 275 level, I wouldn't get too concerned. The first line in the sand is basically where we are at right now. And we can actually look and see what the market is doing now right around that price level. Let's just take a look at the 5-day chart. And you can see that we've had that pretty strong sell-off the last couple of days. There was yesterday, and here we are now. And we haven't started to build any rising bottom, so there's no sign of a bounce back yet. But, you know, by the time you're watching this video, that may have happened. I think that what is important to take away from this is that we haven't broken major areas of support. It's healthy for the market to have pullbacks. It recharges buyer interest. And until we get a real break of some important support levels, and the first one is that short-term upward trend line, and then we can draw a longer-term upward trend line on the weekly chart. We can think about horizontal lines of support, that sort of thing. I wouldn't get too worried. At this point, selling is normal, it's healthy, and hopefully it will create some buying opportunities for us as we go into the strong time of the year. Now, I'll come back and do another video if we get some of those negative breakdowns happening, some of the important ones happening. And so subscribe to the channel, click on the little alarm icon, the little bell icon. That way you'll get an email when I upload a new video. Also want to let you know that I have some webinars coming up in October if you want to learn more about how I trade the market, both short-term and long-term. I invite you to take in those webinars. Just go to the Stockscores website, go to the Trader Training menu, and under there is a link for upcoming events. I think I'll put a link in the description to this video as well so that you can register for those upcoming webinars. I've got 3 or 4 coming up in October. Well, hopefully this has been a useful video for you. If so, please click on that like button. It always helps. And most importantly, trade well.